Warren Buffett has been best friends with Bill Gates since 1991. He has never bought a single share of Microsoft. Not one. And that decision isn't a mistake. It's the entire secret to how he got rich. Here's the idea that made him a legend. It's called your circle of competence. And by the end of this, you'll know exactly where your circle ends and why staying inside it beats being brilliant everywhere else. Right, circle of competence? Most people think investing is about being smart. It isn't. It's about knowing where you're smart and where you're not. Buffett put it perfectly. He said the size of your circle of competence isn't what matters. Knowing its boundaries, that's what matters. Think about that. You don't need to understand 1,000 businesses. You need to understand a few, deeply, and be brutally honest about the rest. Draw, big circle, fuzzy edge loses money. Small circle, sharp edge wins. In 1999, at the peak of the dot-com mania, Buffett was mocked. Everyone was getting rich on internet stocks. Berkshire's stock actually fell that year. Barron's ran a cover story asking, "What's wrong, Warren?" His answer? He didn't understand these companies. He couldn't tell you what they'd earn in 10 years. So he sat them out. Boring. Old-fashioned. Wrong, they said. But here's what happened next. In March of 2000, the Nasdaq hit 5,048. Then it fell. And fell. By October 2002, it had dropped about 78%. Trillions of dollars gone. All those geniuses who were laughing at Buffett? Wiped out. The ones who bought companies they didn't understand, at prices they couldn't justify, learned the oldest lesson in the market. Buffett didn't need to be smarter than them. He just needed to know what he didn't know. That's the whole game. Draw, don't understand it, put it in the too hard pile, move on. He even had a name for it. The too hard pile. Most opportunities go there. And that's not failure, that's discipline. So how do you know when something belongs in that pile? A baseball player figured it out 60 years ago. Ted Williams was maybe the greatest hitter who ever lived. Career batting average, .344. His secret wasn't swinging harder. It was not swinging. Williams studied the strike zone. He broke it into 77 cells, each the size of a baseball. When a pitch came into his best cell, dead center, he hit around 400. When it came into the low outside corner, his average dropped to around 230. So he waited. He let bad pitches go by, even good-looking ones, until the ball landed right in his zone. Then he swung. Buffett read that book and never forgot it. Because investing has one beautiful advantage over baseball. Right, no called strikes. In baseball, if you let too many pitches go, you strike out. In investing? There are no called strikes. You can watch 1,000 pitches go by and lose nothing. You only swing when the perfect one inside your circle floats right over the plate. Here's what nobody tells you. Your circle isn't a prison. It can grow. But only through real work, not wishful thinking. For decades, Buffett avoided technology completely. Then, in 2016, Berkshire started buying Apple. Wasn't that breaking his own rule? No. Watch closely. He didn't buy Apple as a tech gamble. He bought it as a consumer products company, one with a moat most brands can only dream of. He understood how people were locked into the iPhone. He understood the pricing power. That was inside his circle, the psychology of a brand people won't give up. Apple became Berkshire's largest holding, at times worth over $170 billion. Now compare that to the times he strayed. In 1989, Buffett put $358 million into U.S. Airways. He later called the airline industry a death trap for investors. He nearly lost it all. Even the master gets burned when he steps outside the line. That should tell you everything. So here's the principle to carry with you. You will never go broke from the opportunities you skip. You go broke from the ones you take without understanding. Right, you don't get paid for effort. You get paid for being right. Draw your circle honestly. Make it small if it needs to be. Then, wait for your pitch. And when it comes, the business you truly understand, at a price that makes sense, swing hard. Remember, this is educational content, not financial advice. Always do your own research, and know that past performance never guarantees future results. So tell me in the comments, what's one industry you actually understand better than most people? That's where your circle begins. If this changed how you think about risk, subscribe, because tomorrow we're breaking down why patience, not intelligence, is the real edge.